Hello guys, welcome back. In this video, I will teach you my bread and butter trading strategy that you can use right now and become profitable. This strategy requires no daily bias or anything at all. You just have to come to your charts, look at every single pair, and look for this exact setup. And trust me, it is going to play out most of the time. This is all you need to become profitable. In fact, you can pass your challenges. You can become funded. This is like that final piece to that puzzle. Just watch this video and don't watch anything else. Just backtest this, and you will be impressed and shocked as well. So let's get on with this simple strategy. I have thought this strategy before, but I want to teach this again and again so that is clear to each and every single person out there. So we are going to use 2 time frames for this strategy. Our higher time frame is going to be 4 hours. So we're going to use the 4 hour for our higher time frame as our higher time frame, and 15 minutes for our entry. So here are the rules. Number 1, you have to look at the order flow. Is the order flow bullish or is the order flow bearish? Are we going down or are we going up? And we have to look at this on the 4 hour time frame. So we look at the order flow on 4 hour time frame. That is step number 1. Are we bullish or are we bearish? Then we have to trade in that exact direction. So you don't have to be right all the time. You just have to look at the child. You don't have to do anything else. Just look where the price is going. Is it going up or is it going down? And then that is your narrative. Then you have to trade in that direction. So we look at the order flow on 4 hour time frame. Number 2 is then we mark out order blocks near the price action. That is your number 2. Let's say if we are bullish, you want to mark out bullish order blocks. Let's assume there's a bullish order block here. Let me mark this out. There's a bullish order block here. You want to mark this out. There could be a bullish order block here as well. There could be an order block here as well. You mark every single order block here. Let's wait for price to come back into any one of these order blocks. You have to wait. Once price comes back into your order block, so let's say price comes back here, you want to drop down to the 15-minute time frame. Once price comes back to your order block, drop down to 15 minutes time frame. Then you have to look for a market structure shift during kill zone hours. Then look for a market structure shift on 15 minutes time frame during kill zone hours. The kill zone hours are 2 a.m., 5 a.m. You can basically look till 6 o'clock, but I prefer 5 o'clock. So 5 a.m. New York time. That is your London session. Then you have the New York session. It starts at 7 o'clock, but we are going to only trade after 8:30. You look for market structure shift after 8:30 till 11:30 a.m., New York time. The market structure shift must happen during kill zone hours, and your entry also must be during the kill zone hours as well. Let's say you get this market structure shift, and you have the order block here. What is an order block? It is a consecutive bearish candles in this example. Let's say this whole move to the downside was consecutive bearish candles. That would be my order block. But let's say we had bearish candle, and then a bullish candle, and then bearish candle, and then a move to the upside that broke market structure here. Then these last 2 bearish candles would be my order block. The market structure shift happens during kill zone hours, and our entry also happens during kill zone hours. Then we take our entry from here, put our stop right below the low, and we go for 1 to 2 maximum. We only look for 1 to 2, and that is it. Nothing more. Price comes back into here, and we target 1 to 2, as simple as that. And when price comes back to 1 to 1, so if price goes to 1 to 1, you go break even. So you move your stop loss to break even. This is optional, but I always do it. You can be like, okay, I will let the price do whatever it wants. I will let the price play out. So most of the time, what can happen is price comes back into the break-even zone. It goes back up and then stops you at break-even and then hits the take profit. Also, price can just simply reverse and stop you out. It has pros and cons, but I prefer not to lose the capital. I try to protect my capital. It's really that simple, guys. You look at the order flow, number 1, then you mark out order blocks, and then you wait for price to come back into your poi. Then you look for a market structure shift on 15 minutes time frame. I do not recommend using any other time frame for this strategy. I only use 4 hour and 15 minutes because 4 hour is a higher time frame, and a lot of banks and institutional, they use higher time frames. I prefer 4 hour, daily, and 15-minute time frame for our entries. If you're using 5-minute or 1-minute, then you're going to get market structure shifts all around the place, and you're going to get faked out most of the time. You will lose a lot of trades. I highly recommend you stick to these time frames, and trust me, but if you just follow the simple strategy, guys, trust me, you're going to win. Anyways, let's move on to the examples, and then I'll end the video. Alright guys. Here is the for example. I'm looking at Euro GBP on 4 hour time frame, of course. First of all, we are going to look at the order flow. On the very first look, I can tell that the order flow is bearish. We are going down on the higher time frame, that is 4 hour. We are only going to trade in that direction. That gives us high probability that the trade is going to play out. Right here, what I have done is marked out the order block. When you are marking out the order blocks on the 4 hour time frame, you have to choose the last candle like this. So these consecutive bullish candles, right? You don't want to choose this on the 4 hour time frame, okay? You want to refine it and go back here and choose the last candle like this. However, when you are going to take your entry must be from here, okay? From the start of this order block, consecutive bullish candles. If we were on 15 minutes time frame, your entry would be here. But since we are at the higher time frame, this is going to be our refined order block, the body of this candle, not the weak, cool. Then we wait for price to come back into our poi. This right here, it comes back here. Make sure that the order block high is not violated. If the high is violated, then that order block was not respected. Look for other pois. Don't look for market structure shift when the order block is violated. Since we have if I were to touch the order block here, I want to drop down to the 15-minute time frame. Right over here, you can see if I remove this, we made a higher high, higher low, higher high right here. And we have a market structure shift right there. If I go to the 5-minute time frame, you can see it is a clear low right here, cool. But if you go to the 50 minutes, it's going to look something like that. So now this is the last bullish candle before a market structure shift. If there were consecutive bullish candles, then my entry would be from the start of that consecutive bullish candles. But since we only have one candle, the body of this order block would be my entry right here. I would put my stop right at the high here, and I will go for 1 to 2 as per my rules. Let's see how this plays out. Also, look at the timing. The market structure shift happened during the kill zone hours. That is a plus point. If I play this through, you can see we got our entry, and just like that, we go back down. At this point, I would go break even. Around here, I would go break even, but then, as you can see, take profit was hit. And if I play this through, you can see that we dropped way lower. Of course, this is hindsight, but when you are going to backtest this, you're going to be shocked. Just stick to this. Guys, I hope you must have liked this trading strategy. I hope you guys did enjoy this video. If you get to learn something new on our channel, then do subscribe to our YouTube channel. Goodbye. Thanks for watching our video.